Qualcomm just got absolutely hammered, down nearly 7% in a single day, and the chip sector is bleeding across the board. This isn't just a bad day for tech. This is a signal that investors are getting spooked about the entire semiconductor rally. Let's find out what it means for your portfolio. Let us start with the indices. So the Nasdaq had a rough one today, down 1.98% to close at 25,169. And here's the thing, when you look at the weekly picture, it's even uglier. We're down 6.27% just this week alone. That's a pretty significant pullback. The big driver here? Semiconductor stocks are getting absolutely crushed. Qualcomm, Broadcom, AMD, they're all seeing serious selling pressure. There's some concern about valuations in the AI chip space, and investors are taking profits after a pretty aggressive run. Add in some broader macro anxiety, and you get a day like today. The Dow down 1.87% today, closing at 49,918. So it's down 2, but not as badly as the Nasdaq. You can see there's a little bit of divergence here. The Dow's down 1.52% for the week, which is a much smaller hit than what tech is taking. What this tells you is that the selling is really concentrated in the high-growth, high-multiple stocks. Industrials and some of the more defensive plays are holding up a little better. It's a risk-off day, for sure, but not across the board. There's still some strength in certain pockets. Now here are the top movers of the day. Qualcomm took a massive beating today, down 6.92% to 191.20 a share. For the week, it's even worse, down 23.24%. That's a bloodbath. The semiconductor space is getting hammered by profit-taking after a huge rally, and there's some concern about valuations in the AI chip cycle. Plus, there's always geopolitical risk with Qualcomm, given their dependence on both U.S. and international markets. When you see a drop that steep, especially over a week, it signals real fear in the sector, not just a normal daily. Eaton Corporation down 6.54% today to 375.46 and down 10.86% for the week. Eaton is an industrial power management play, so when you see it fall this hard, it's reflecting broader concerns about industrial demand and economic growth. The fact that it's moving with the chip sell-off suggests investors are getting risk-off across the board, not just in tech, but in cyclical industrials too. That's a sign of worry about the near-term economic picture. Caterpillar down 6.4% today to 856.16. Weekly, it's down 7.56%. Caterpillar is maybe the biggest bellwether for global economic health. Construction, mining, infrastructure all depend on heavy equipment. When CAT is falling this hard alongside semiconductors, it tells you the sell-off isn't just about one sector getting too expensive. It's broader anxiety about growth and demand. This is a stock that typically holds up pretty well during sell-offs if the economy is solid, so the fact that it's breaking down is noteworthy. Broadcom down 5.12% today to 372.10 and down 22.35% for the week. Another chip company taking it on the chin. Broadcom is a critical infrastructure play in networking and semiconductors. So when this stock is falling this hard, it's a direct signal that the entire AI infrastructure rally is getting a reality check. Investors are asking hard questions about valuations, demand, and when these companies will actually convert all this hype into earnings. That skepticism is showing up in the stock price. AMD down 4.86% today to 452.40 and down 16.61% for the week. AMD is probably the most levered to the AI boom narrative out of all the chip companies, so it makes sense that it's getting hit when sentiment turns. It's down less than some of its peers today, but the weekly drop is still substantial. This suggests some profit-taking, but also recognition that AI chips, while exciting, are getting priced for perfection. Any hint of demand weakness or competitive pressure, and these stocks fall hard. Now let us look at energy and fuel. Oil had an interesting day, up 4.68% to 92.33 a barrel. So crude is actually one of the bright spots today, which is kind of unusual when you're seeing broad market weakness. For the week, though, it's down 3.84%. The move higher today is likely tied to some production concerns and geopolitical tensions that are keeping supply a little tight. When everything else is selling off, commodities like oil can sometimes see flight to commodity demand from investors rotating out of equities. It's a small bump, but it's there. Natural gas up a small 1.27% today to 3.180. Weekly, it's basically flat, down just 0.93%. So gas is pretty stable, which makes sense for this time of year. Cooling season is just kicking in, so there's seasonal demand picking up as people crank their air conditioning. Storage levels are okay, and supply isn't stressed. It's one of those boring, steady commodities that's just doing what it usually does in mid-June. Moving on to metals. Gold is doing what gold does when people get nervous, down 4.65% today to $4,062 an ounce. But here's what's really concerning for gold bulls. It's down 8.44% for the week. That's a meaningful drop. You'd normally expect gold to be rallying when stocks are falling like this, because it's the safety trade. But gold is actually selling off hard. What that tells you is investors are raising cash across the board. They're not rotating into safety, they're just exiting risk entirely. That's a different sentiment signal, and it's worth paying attention to. Silver got hit even worse, down 3.78% today, down to 62.63 an ounce. And weekly? Down 14.77%. Ouch! Silver got absolutely crushed this week. Here's the thing about silver, it follows gold for sure, but it's also more tied to industrial demand and manufacturing cycles. That big weekly drop might be telling us something about expectations for industrial activity going forward. Silver is more volatile than gold, so when you see it down that much while gold is down 8%, it suggests people are worried about manufacturing and growth, not just looking for short-term safety. And finally, let's look at tomorrow. All right, so here's what we're looking at going into tomorrow. The market got spooked today. It's a risk-off day driven by profit-taking in high-flying tech and some broader macro anxiety. Chips got hit hardest, but the selling spread to industrials too. Gold's weakness suggests this isn't a classic flight to safety. It's more like investors stepping back and reassessing. Tomorrow there are no major events flagged, so we're probably going to see how much of today's selling sticks. Watch for any stabilization in semiconductors. If they can hold here or bounce a little, it might signal that the worst is over. If they break lower, we could see more weakness. The important thing to remember is that sell-offs like this, while they hurt in the moment, often create opportunities. So keep your eyes on which quality names are holding up best during this pullback. Those could be the ones to watch when sentiment turns. We'll be tracking all of it for you tomorrow. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.